Zscaler has just been getting crushed in the markets along with broader software, and I think it has definitely hit a bottom, and I think it's an interesting buy. And I'm going to explain exactly why I think this is a pretty high conviction software name to hold and accumulate. But to back up, I think we need to discuss a little bit about what's going on in software. For those of you who are new here, I'm a venture capital investor by day, and I spend my time thinking about AI, the markets, private markets, public markets, and I'm here sharing my thesis on software and Zscaler with you guys today. To start off, I think one thing I'm sure everyone here knows, software has just been getting crushed. We're seeing 50, 60, 70% names that are just being dropped from all-time highs of 50, 60, 70%. Forward multiples have came to an all-time low. This is Bessemer Ventures Cloud Index showing forward revenue multiples reaching, ridiculous levels right here, median of 3.1, or here we go, average revenue multiple 5.8 times, despite, still compelling growth, in my opinion, for some of these names. That said, you know, I think we're seeing, bloodbath here. Names that, we all know, like ServiceNow down 40%, Salesforce, let's see, just getting crushed down 33% in the last year. And I do think that while, I work in the industry, I definitely agree that obviously the main catalyst for the drawdown is, and software names getting crushed, is AI. The narrative here is that, on a couple levels, but if it's easier to write code and AI is making it easier to write code, then the moats of these businesses kind of is diminished and growth will soon fall or is already falling, and over time that will lead these businesses to slow down and potentially be disrupted by AI. That said, I do think that this has, while there is a lot of merit to that perspective, I do think, as someone who evaluates AI startups on a day-to-day basis, I do think there's a lot of disruption happening, and there is a lot of merit to the risks associated with the disruption in AI. I think based off of what I'm seeing in terms of the sell-off, it's pretty indiscriminate, right? We're selling off companies across the board. Clearly, this shows, charts like this kind of show that everyone is being crushed, whether you're have a weak moat, a large moat, your security, your software, your sales, your horizontal, your enterprise, doesn't matter. You are getting hit hard. And I do think that leaves opportunity for investors who are able to look past some of the fear and dig into the numbers and see if there's opportunity. I do think the market is basically pricing in a worst case scenario pretty broadly. And again, I don't think that's fair for some of these businesses. I do think that, when an entire sector like this derates, there's a lot of opportunity. So with that said, I do think one of the more interesting names in software and in security in general is Zscaler. Zscaler is a leading software provider, so cybersecurity software provider, a leader in zero trust network access, but has basically expanded its solutions to touch on a ton of different facets of the attack surface within cybersecurity. It offers a variety of different solutions, from zero trust network access, where it began, data security, which it's expanded to, and more recently AI security, which it is actively growing, and it's continuing to accelerate. I think Zscaler has been hit really hard recently in basically the last year, down 54% from all-time highs. And a lot of that's being driven from what I think is fear. We have recent announcements from Anthropic, like Claude Code, now Claude Cowork, which is coming for the rest of the enterprise, basically agentic sort of solutions that, irrationally instill fear within Wall Street, thinking that, hey, and also Claude Code. And I think the biggest catalyst here was Claude Code. Basically, here Anthropic released a code security reviewer, basically allowing AI to review the code that developers are writing, which was released on February 20th, and all cybersecurity names dropped like 10%. It was pretty crazy. From the outside, it's understandable to have some fear. there was a huge sell-off after that, fearing that if it starts here, it can expand into other vectors of cybersecurity. My pushback on this is, AI code reviewing is a very narrow and specific part of the attack surface. Businesses like Zscaler, they touch a wide facet of the attack surface, from zero trust, data security, a variety of different AI security solutions. They don't even specifically focus on code reviewing, and even beyond that is a CISO's perspective. A chief security officer is not probably going to take a lot of merit when looking at cloud solutions to implement multi-$100,000, multi-million-dollar contracts to secure their attack surface. So I'm not as worried about that. Market is sort of extrapolating AI commoditizing security, and it's derating software. Beyond that, I think what was interesting is that despite the pretty great print, the company dropped another 15%. This is what happened. They released earnings, sort of rebounded from the Anthropic fears, and then after earnings just got crushed. And so now we'll go into the earnings report and kind of break down some of the highlights and then some of the risks, and you'll see, why I think this is just a pretty good layup when it comes to a quality business. Zscaler now is trading at a 6.2 times forward revenue. This is a little bit outdated. It's trading at a 6 times forward revenue, and by the time you see this, maybe even lower, given the geopolitical events that have occurred while I was recording this video over the weekend, and it is the lowest in the company's public history. So keep that in mind as I'm going through some of the prints here, some of the financial overview here. So jumping into the earnings report, like I mentioned, I think one of the main theses here is that, Zscaler is a broad platform, right? It touches a variety of different aspects of the attack surface. From a financial perspective, I mean, they sort of crushed it. They beat on revenue, they beat on operating margin, they beat on adjusted earnings per share, and they are a rule of 62 business. And typically, best in class software businesses, a rule of 40 is really strong. And Zscaler is operating at a rule of 62 and at scale, right? This is a multi-billion-dollar ARR business, so it's pretty exceptional performance here, in my opinion. Right, so this is a growing business that is generating, a ton of free cash flow as well. Right, again, going through some of the highlights in Q2, most of these are up at or above guidance, revenue growth of 26%, ARR growth of 25% at $3.4 billion, strong operating margin, and our POs grew to 31% at 6.1 billion, customer commitments, really strong free cash flow margin, and Zflex is growing as well. Some of these new products are also growing. So just overall, a really strong quarter for Zscaler. The business's gross margins were 80. Our operating margin grew by $41 million. The balance sheet is they're sitting on $3.5 billion in cash, $1.7 billion in debt, and free cash flow margin was 20%. So strong, very strong cash flow metrics across the board. As if there couldn't be more good news, they also raised guidance across the board from revenue to ARR. They raised revenue guidance. Another big factor here is that in Q2, their non-seat-based metered usage solutions delivered just over a quarter of new ACV, and ARR tied to those offerings grew more than 100% year over year. What this basically means, I think, is 25% of non-seat-based solutions in Q2 ACV contribution. One of the bigger worries about the AI disruption is that if there are AI is making one person just as productive as 5 people or 10 people, then a company doesn't need to hire more people, right? So if there's less people in a certain position in an organization, that could be a problem for SaaS businesses that price based off of a seat, right? If you are pricing per seat, per person, right, and there are less people at a company, then there is risk in terms of your ability to sell your ability to grow. I think this is another great point and sort of just signal in that ARR for non-seat based solutions is growing 100% year over year, and it composed 25% of their Q2 ACV. I think the other thing here is, organizations are rapidly adopting AI, and that's create expanding the attack surface at just an unprecedented scale. They discussed this in that, you know, in an agentic era, right? Even if there's perhaps less people, there's going to be more actions being taken. Because if one person is managing 10, 100, 1,000 different agents that are all 10 times more productive than a normal person, these agents will be calling tools more often, accessing data, holding various passwords, and moving between applications at a much faster scale, quantity, and volume. And as a result, in theory, companies that shift from necessarily charging humans, but maybe charging agents or just based off of consumption, you could theoretically make and generate more revenue. And so that's like the tailwind I see in businesses like Zscaler, which not only are implementing AI into their own solutions, but are a net beneficiary in that AI is accelerating threat actors, which should increase the demand for their solutions. This is underscored by several new logo wins and upsells from large customers, and I'm sure we're going to see that continue to grow. One of the big theses here for Zscaler and for security companies in general is that, there is a certain non-discretionary budget for security solutions, and overall, I do think that AI is only going to make that solidify that budget. I don't think it's an if, but a when we see a very high profile breach because of an agent. I think we've already seen a handful of these actually, but they're only going to continue. And this should catalyze the stock to re-rate. Obviously, no businesses without risks. And I think a couple of risks here are obviously competition from other players like CrowdStrike and Palo Alto. I have worry about the seat-based compression, right? I do think, one thing is for sure is that the future is uncertain, right? I could have a thesis on why I think things will play out in the bull case, but I have to be self-aware in that there is risk here, right? I could be wrong, and the seat-based compression will hurt a lot of software businesses, and it may also hurt Zscaler. I do think that baked into this sort of free cash flow margin is a lot of stock-based compensation. And, while everyone's kind of sucked it up over the last decade and for software, I do think that there is some risk that, hey, maybe there is a permanent re-rating here as investors start to penalize companies that report free cash flow with hundreds of millions of dollars of stock-based compensation baked in. So those are a couple risks. But overall, I think this is a high quality cybersecurity platform that's touching a variety of different vectors of the attack surface. Market is pricing it for pretty structural decline, and I do think a lot of the drawdowns in the last couple of weeks and months have been literally because of headlines and not actual fundamentals. This earnings report just underscores how well the business is executing and continuing to grow. I do think this presents a pretty strong opportunity to enter a durable compounder at a really compressed multiple. So that's my background on Zscaler. If you like this video, please be sure to like the video and subscribe. And let me know down in the comments if there's any other companies you'd like me to dig into. Thanks for watching.